Welcome to ETF 360. I'm Tom Lydon here with our Director of Research, Dave Nadig. And we've got a very special guest, Tim Coyne, who's Global Head of ETFs with T. Rowe Price. Tim, it's been an exciting year for T. Rowe Price. You folks dove big time into the ETF space. Why now?
Yeah, Tom. So, this has been a work in progress, quite frankly. We were the first asset manager to file for a proprietary model to bring active ETFs to market dating back to 2013. So 7 years in the process. So we're really happy and excited to be in the market. Again, this has been a long journey for T. Rowe Price, and we did use a lot of that time to build out our capabilities. And I feel we built a very strong foundation, not just for our initial 4 products that we launched, but really looking forward to building out a comprehensive product suite across asset classes over time.
I wouldn't be me if I wasn't a little skeptical about active management. I'm certainly on the record for that. But you guys came to market with a bunch of actively managed strategies that, frankly, look like old school active. Why now? Why should investors look at what you're doing and say, hey, you know what? Now's the time for active?
Yeah, I think a couple of things here, Dave. Number one is that is what T. Rowe Price does. That's our business. We have time-tested approach to actively managed products. ETFs are really the latest generation of product vehicle and how we're delivering our active management to market. So we're very excited about that. But I think active in general, certainly it's been an unprecedented year in 2020, right? And looking out into 2021, I think there's still a lot of open questions in terms of, what does the market look like or, coming out of the pandemic. And I think being an active manager puts us in a position to really be nimble and, evaluate the market, look at different companies, and really, our long-term goal is to provide alpha in investors' portfolios. So, being nimble in today's market and looking forward just with, coming out of the uncertainty that we had in 2020 and the uncertainty kind of going into 2021, I feel really good about, being an active manager right now, and that I feel we have the right vehicle for investors to access our capability.
So, Tim, with that being said, one of your most popular mutual funds, the Blue Chip Growth Fund, has done really well this year. In August, you launched an ETF, TCHP, based on the same strategy. As we look into 2021, are your portfolio managers still as optimistic on these high conviction stocks?
Yeah, and I think, and that, again, the beauty of active management is, we are constantly evaluating the marketplace, and we have a time-tested investment approach. Blue Chip Growth is a good example of that. That product has been in market for years in the mutual fund wrapper. What we've done is really, that's one of the 4 products, kind of flagship products at T. Rowe Price that we delivered via an ETF. So again, it really gets back to the core of what T. Rowe Price does, the long-standing investment approach, the due diligence, the extensive research that we have into companies. We have over 425 research professionals at T. Rowe Price constantly looking into companies. And, it's a group approach, making decisions on the best opportunities that we feel. And, T. Rowe, we're also looking at this in the long term. It's not, our investment style isn't, quick hits. It's really doing due diligence, investing in good companies for the long haul.
Well, kind of like everything else, sometimes it takes a long time to have an overnight success. You guys, like you said, you've been working on this for 7 years, finally worked. It's about how long it took us to get this call set up and get all that technology working as well. Thanks for joining us, and thank you all for listening. We'll see you next time on ETF 360.